Hello, everyone. Welcome to an Options Income Blueprint live trading session on May 31st, 2022 at 11 a.m. Eastern with Michael Schulman. My name is Emily Norris with Traders Reserve. As Michael calls out today's trades, we'll be posting those in the chat box. We'll also be sending them out via email alert. We are recording this session and we'll be posting it to the member website. If you have any questions, feel free to pop those in the Q&A box. We'll get to them once we've wrapped up with today's trades. And you should have an email with your full schedule for June live trading. There's just one link to register for the full month sessions, with the next one being on Tuesday, that's June 7th at 11 a.m. Eastern. With that, I'll let you take it away, Michael.
Thank you, Emily. Thank you. Welcome, everybody. Hope you had a good Memorial Day weekend. This actually becomes important. We have a bunch of new members. It's a cash first service. It's not a portfolio service. It's trades, not a portfolio management service. And rates of return are measured. I mean, you have to do your own, obviously. You have different goals. You close at different times based on how much cash we're generating from the capital we put up. Point of clarification for new members, got an email about this today, a smart one. Actually, why didn't we close Citi earlier last week? And I pointed out that Citi, first of all, is a core position that we're going to roll every week, generate cash, and get to break even. Maybe put a new core position on. But second, we manage all roll positions from the original trade, not from the last trade. So the last trade may be very profitable for you, and you're wondering why we didn't close it, move on. It's because it's a roll and we may be underwater, and we're doing it from the math of the first trade. Please don't feel compelled to make all trades. We slowed down a bit because of the tumult in the market, but we'll still probably be on track to do 100 trades this year. And it's not a portfolio of stocks. Even the core positions, Citigroup, Marvel, General Motors, and Pfizer are there to generate cash, but they're not necessarily to be traded, as a portfolio. Let's go to last week's news. Interest rates seem to be softening, and I meant to add a bullet point. And then there was a comment by one of the Fed governors that maybe interest rates are hardening. Maybe there'll be more. And the question, of course, is whether he's getting in Dr. Powell's face and saying this is what we should do and doing it publicly, which wouldn't have happened 20 years ago. It didn't even happen under Bernanke, but it's now part of the Fed thing. They have tiny little debates in public. Or Powell said, go warn the world that we may have more than 1 or 2 half-point increases. Last week, retail was quite important last week in an unexpected way. Walmart and Target have been hammered. Inventory accumulation, shift in people's buying habits, et cetera, et cetera. And you could go to Costco, you could go to Dick's, you could go to the different ones. But Williams-Sonoma, I just pointed out, these companies all hit consensus, were a little bit below or somewhat above, and they all went up. Dick's actually missed or had a down forecast, but it went up. And what it means is the consensus published Zacks estimates, the ones on Yahoo, whatever you may be looking at, the street was darker about retail. Maybe that's ended this week. We had a whole flurry of them last week. We'll see, because there are many more retail announcements this week. Travel was very vibrant, is very vibrant. It's not just Memorial Day. My wife was taking a business trip, and her $900 ticket for the same trip a couple of years ago was $1,700 domestic. And it's because of reduced capacity in addition to people getting on planes and visiting. And chips were rebounding it was sort of it was somewhat tied to renewed belief that the world is not ending and we're going to have some growth, and chips always grow faster than the rest of the economy. Marvel had very nice earnings, and we'll probably put out, I was going to put out a call position today. I had written the alert, but with the way the market opened, I decided to sit on it. You may see something later this afternoon, but certainly we'll trade a call. Trade a put sometime this week. So this week, this is a list of stocks, and that's Chewy.com. Nobody Shutter. For those of you who don't know, in master's programming and commanders, we took a big hit on Chewy. And the street really is eyeing Chewy about whether they've stabilized. They had lost a little bit of market share, and they wanted to know if the ship was being righted. Capri luxury goods, semi-luxury goods, CRM is Salesforce.com, which would be an indication of business software spending, but also employee expansion. They're the first, believe it or not, cloud application from a zillion years ago. And they're considered a bellwether for business behavior. Duluth is Duluth Trading Company, really good commercials. And again, clothing took a bit of a hit with inventory accumulation. This is sort of underclothing, and whether that's affected that much by discretionary spending and shifting to travel, we'll see. HR is actually we'll skip that one, and we'll skip that one because we don't have that much time. Lululemon is another indicator of discretionary spending, and Pure Storage is something that I've not discussed before, but they're a super duper gigantic high-end storage company, $1 million storage devices for cloud computing companies, and they'll be an indicator. Advanced Micro Devices showed that server chip sales were strong, and this would be confirmation and might put another jolt into the chip market. Interest rates, the meeting is next week, but you'll see the bond market and the equity markets anticipating in some fashion this week. And we still have crypto, Ukraine, and economic data. The rhetoric, and it's more than rhetoric, the discussion about crypto is becoming increasingly cold-eyed and harsh. And there was a long piece either in the New York Times or the Washington Post, I can't remember, about a full-time software engineer, but she's a Wikipedia editor who takes on missions of exposing things, and hers is crypto. And she's really been on top of what is going wrong in the crypto market. And it's more corruption and scams as opposed to just a fundamental lack of value in crypto. But the fundamental lack of value is really everything is hit. And these assets are correlated. Risk assets are correlated. So losing $1.5 trillion in value has certainly affected equity markets. So current capital allocations around 35,000, a little bit more. Try to stay within 50, but that's a guideline, not a promise. Now, first position, United Airlines. Let's see. I was looking at this week's. We may go to next week. And we have a lot of positions expiring on Friday, so I don't mind going out a little bit. No, we'll go for this week, the 34 to the 37. The bid was 34. Whoops, 37. So it's 35, go as low as 30. United Airlines, and I'll talk about it for a moment. United Airlines symbol, UAL. Sell the June week one or the June 3rd, $45 put for 35 cents. The bid is 34. The ask is 37 to go as low as 30. That's United Airlines symbol, UAL. Sell the June week one or the June 3rd, $45 put for 35 cents to go as low as 30. I don't know if you've had a chance to listen to the update, or I don't even know if it's been posted yet. And the update focuses on our Delta Airlines trade last week. And one of the things I pointed out was I want to trade the airlines anecdotally, not every week. The reason is I think United Airlines is overvalued. It's fairly valued to overvalued if you take a look at historical norms for their balance sheet. Ditto for Delta. Delta is fairly valued. I think Southwest is fairly valued. I think American may be slightly overvalued because of liabilities they took on during the pandemic to survive, the selling of their frequent flyer marketing rights and all that sort of stuff. But travel is booming. Margins have gone up. Prices have gone up. Prices have gone up. Margins have gone up. Right now, there's a scarcity of pilots, not planes. The airlines offered buyouts to a lot of pilots. And right now there's a shortage. Many of them are not coming out of retirement, to say the least. And if they are, a lot of them need to be recertified, which takes time. So I do want to trade the airlines. As long as the real world data confirms that people are traveling and paying more. And actually my wife's flight's on United Airlines. the bottom line is we'll be trading them, but it isn't necessarily saying that we should trade them for 52 weeks in a row, because I sense the travel boom will start to dissipate in the fall. And the question will be, as they add capacity and add pilots, what will happen to their operating margins? United Airlines, symbol UAL, sell the June week one, $45 put for 35 cents. The bid is 34. The ask is 35, to go as low as 30 cents. The next trade, well, I keep on doing that. The next trade is Starbucks. It's up today, at least it was last time I looked. Coffee bean prices are falling in and of themselves, plus because of the growing strength of the US dollar vis-a-vis the currencies in a lot of markets, Ethiopia, Costa Rica, Colombia, where coffee beans are grown, in many countries in Africa, Kenya, and so forth and so on. So coffee bean prices are falling in a meaningful way. Starbucks hedges a lot of its bean purchases, so it doesn't mean there'll necessarily be an immediate impact, but there will be an impact in terms of their operating margins. And I think you know that I really like the company and I like the way it's managed. So I want to push this out to the 10th. I'm going to look at the chart for Starbucks. I did not, someone is always calling me to task, which they should, because I do not put up charts enough. But for a longer term position like this, let's take a look at the chart. And you can see what's coming in. This, of course, is a market move. But this was also down here. You see reasonably sharp outflow of money, negative sales, negative prices, negative price movements. I haven't had enough coffee today. And this has been moving at the market. But even on a day like today, with the market jumbled, Starbucks is up because of coffee prices. So let's take a look at the 10th. I want to spread our trades around calendar-wise. And it was the 73.50 an hour ago. And it's the 73.50 now. It's 51. Excuse me. 54. 52. And I do hope to close this early. Starbucks, symbol SBUX. Sell the June 10th 73.50 put for 52 cents. The bid is 51. The ask is 54, to go as low as 46 cents. Let me leave that up there and speak about the company. The company stock took a hit when founder Howard Schultz came back. And even though it wasn't in the press, and many of you have heard this before from me, I believe the former CEO was asked to go bye-bye, in part because of plans for a massive stock buyback. And, you know, Schultz, his book that he wrote a while ago, whose title I forget, it was very good. Schultz is an avid capitalist, a guy who grew up in a public housing project in Brooklyn, as did I. And on the flip side is they've always been they've been way ahead of the fast food industry, and they've been a little bit ahead of service industries in general, in the way they, regardless of headlines, the way they treat employees and so forth and so on. And the first thing Schultz did, like 5 seconds after he came back as CEO, is he killed the stock buyback program. He wants to spend the capital on closing stores, which you take a balance sheet hit on your lease, opening new stores, all with drive-through, and opening new stores that are only takeout, and modifying stores. And that's just what should be done. The analysts agree with it. But a lot of analysts are myopically focused on 90-day performance, and they know this is going to, it's going to hurt and so forth and so on. So I think the stock is a screaming buy. Starbucks does great when the economy is doing well. Starbucks does great when the economy isn't doing well. And the only question mark facing them is with people not going to the office as much. How much is it going to hurt them? And it's hurt them, but it's hurt them significantly less than was anticipated during the pandemic and in the run up to the post-pandemic life of not a lot of people. Like my son just was told he's going back. He went back last week, 3 days a week. He's not particularly happy about it. Starbucks, symbol SBUX, sell the June week 2 73.50 put for 52 cents. The bid was 51, the ask was 54, and to go as low as 46. United Airlines, symbol UAL, to sell this June 3rd week, June week 1, $45 put for 35 cents. The bid is 34, the ask is 37, to go as low as 30. No surprises here. As a net debit, this should be a sell a put, excuse me. And just let me talk about the stocks a little bit. Pfizer and Moderna have solidified their positions as the two vaccines that everybody wants to buy. For cost and logistical reasons, meaning the temperature required to store them, you have to assume that the Novavax machine may get traction once they can figure out how to get their production ramped up, but at low prices around the world. It turns out the Chinese and Russian vaccines really don't work very well in Omicron. And the Chinese have not decided they're not going to import. They may change their mind. But Pfizer has been using its cash very, very well to buy other companies without diluting shareholders. Citigroup, the banking industry is stabilized. Now it's the debate of growth, versus, will economic growth slow down and hurt the banks? Citigroup is significantly undervalued, as actually is Bank of America. But Citi sold off much more sharply than the rest of the sector because of international exposure to Europe. And there will be a European recession. The question is, how bad will it be? Sunrun, we're just going to watch. I know we've taken really big paper hit on it, but I don't see us getting out of solar. We need a solar position that we can trade. And we're in Sunrun. We're going to stick with it. The Marvels and net debit, they had very nice earnings last week. You can pick up the earnings announcements, just go to Yahoo or Seeking Out for the company's website. And they have such a diversified product line and a major position in electrical vehicle chip usage that they surprised analysts a little bit. The stock is doing well. Lyft, I still think we'll probably roll it. We're getting closer to break even. Travel is going to help. It's more trips from the airport that are longer and so forth and so on. They took a hit because of announcement that they're going to be spending more money to recruit drivers and so forth and so on. And Schwab, we're getting closer a few weeks to get out. It was just bad timing on my part when we put the trade on. But the company's doing well. It's an asset accumulation play. So once more again onto the breach, United Airlines, symbol UAL, sell the June week 1 $45 put for 35 cents. The bid is 34. The ask is 37 to go as low as 30. Starbucks, symbol SBUX. This is for June week 2. June 10th, a 73.50 put for 52 cents. The bid was 51. The ask was 54 and to go as low as 46. And I'd love to close this early, and I'm hoping to close it early, and I plan to close it early if the market allows us to do so. And with that, take your questions. If you have questions about Masters, I'm going to answer them. We have a Masters session at noon, so we're just going to focus on options income blueprint questions here.
All right, Michael, Anita says, I'm short a Starbucks $80 put, the January 23 leap. Any suggestions to generate income to reduce my debit in this position?
That's a good question. I don't know. I'd have to take a look at all the chains. Could you do me a favor and send me an email, support@tradersreserve.com, or if you're in the Masters program, to my private email box, and I'll take a look today at the chains and come up with something, and 3 or 4 different things you might want to consider doing.
Okay, Sue says, could you talk about Chewy? You mentioned it earlier, Michael.
Yeah, Chewy is, we took a big hit on it in the Income Madness program, which is Income Masters. And I should have taken a loss earlier, and I hung on, assuming that previous excellent execution would happen, and it didn't. The company had compressed margins. They lost a couple of points of market share. And the reason, which Emily and I have spoken about offline, is they still charge for shipping on orders under a certain amount of money. Well, as people trying to conserve money and what they spend on a weekly or monthly basis, that becomes a big deal. Now, Amazon is number one in the business. Chewy is a close number two for online pet supplies and pet food. It's not about people giving the dogs back. Those are sexy headlines. That has nothing to do with happens. So with Chewy, I would not be in a position before earnings. But here's the but. Last week, companies that even had a sour forecast like Dick's, it wasn't sour, but it wasn't upbeat, that it went up. And retailers who either hit their consensus expectations, missed a little, or had a darker forecast than you might say would lift the stocks went up because they weren't as bad as what people were expecting. So the question is, how negative is Wall Street really about Chewy? If you step back, the only real fundamental real world problem with the company is they're still not profitable on a GAAP basis. And they were hoping to become, I'm talking about on a yearly basis, not on a quarterly basis, that they would become on a GAAP basis, traditional accounting basis, they would become profitable. And that's been pushed back. And if you continue to grow above 20% a year, the street doesn't care for an established brand that's a market leader. But they have been growing 20%. It's been closer to 10. So I would love to, quote, re-recommend it. You know, in this kind of publishing environment where you have to consider members, not just the numbers of a trade. A lot of people, this includes me, when you're burnt on something and you take a loss, you're quite reluctant often to get back in, even if it's merited. So I'm going to take a look and pick their earnings apart when they come out. I think it's Wednesday. I'm not sure. It's either Tuesday, Wednesday, or Thursday. And you can always send me an email as a follow-up to this about what do I think about earnings. The one thing I would say is I would try to avoid earnings, or if, like we did with the target position in Masters, if you own shares or you own leaps, meaning long-term calls, I would buy put.
All right, Michael, David asked for your thoughts on Salesforce and Lululemon.
Well, I wouldn't trade him this week. I'm not, if you're looking for speculative trade, well, we just put out the notes about, I've gone over, I didn't realize John was going to say that shorting is the dark side, but it is. And I used to run a short service, and I want to talk about speculating on the short side. I just want to talk about it. We're not doing it in this service. So I would avoid earnings for both of them. They both are very high multiple stocks. Lululemon is a bellwether of discretionary retail sales. They're also an exceptionally well-managed company. They're an 8++. And if you put the two together, the question facing Wall Street, are estimates too high? And will discretionary clothing purchases abate as people shift to services, to travel, the spa? Now, what argues for Lululemon having good earnings is Ulta had good earnings, and it's a different price point. But that's pure discretionary spending, and it's about taking care of oneself. And it's a female market, and most 80-85% of Lululemon's business is female. And so they may surprise Wall Street on the upside. If I was forced to testify, like it was Perry Mason, and you explode in the courtroom and everybody confesses to murder, I would confess to saying I would go long Lululemon if you had to put on a position right now, but I wouldn't put a position on right now. Now, what was the other stock? Oh, Salesforce.com. Ditto. Salesforce.com is a bellwether, not just for business software purchasing, but for hiring, meaning many industries and many companies, you have to be Salesforce.com proficient to get a job. And so they're viewed it two ways: as a bellwether for certain industry performance and hiring. And with the lack of interest by many professionals of going back into the workforce, will they expand by selling more seat licenses, or with more people working at home? Are they a preferable cloud-based alternative, and we're going to learn more during earnings. But both stocks are really volatile around earnings, big time. If you're already long those positions, I would consider covering them with a put.
Okay, yep, it looks like Chewy reports tomorrow.
Okay.
Any thoughts on the Zim June 3 puts, like the 60 strike?
I wouldn't go that close in. I'm only going to sell silly puts on Zim. And it's stabilized, and put premiums have really shrunk. So actually Zim was what I wanted to trade today, not Starbucks, but I'm not doing anything that is at a minimum, like at a 58 or 50 cent. Let's take a look where it is now. Yeah, I wouldn't, I'm not, I personally, in this service, I would look to nothing higher than a $57 strike. Um, right here, and this is a 6-month chart. Let's go to the 1-month chart. You're down here at 55, 56. This is a very, very volatile stock. We get spikes on bad news. We get spikes on what people think is good news, and so forth and so on. So I trade this very, very, very cautiously. If you don't mind rolling, and I know many of you do, but if you don't, and you want to do a 60, just be prepared to roll it. And they're gigantic premiums week to week. So it's almost an ideal stock to trade for the long haul. For a one-time trade, I wouldn't do it at 60. But if you're going to trade it for the long haul, sure, because it's a really good company. It's a market leader in refrigerated shipping. And I don't think, the stock may be highly priced, but the company itself is just going to continue to perform very well.
Okay, I just want to let everyone know I put a link to the schedule on the site for live trading sessions. You can click on that link to register. There's one link for the whole month's live trading. We also will be holding our options weekly income report live. That's Monday, June 6th at 11 a.m. Eastern. That is a separate link. So technically there's 2 links for the month of June. Michael Ben says, Bank of America and Citigroup, is it time to roll now?
No, not today. Just the way the market is trading, the banking sector is trading. And we also have to consider what potential impact there would be from the Fed announcements. So far, the Fed announcements short-term have not really impacted banks that much, but we'll do something with them this week.
Okay, we don't have any other questions in at the moment.
I'll yak a tiny bit more. I've mentioned, I don't know, did I? Yeah, I guess I did a couple of weeks ago. I spoke about there's sort of a paradox for some members, and that based in part because the size of your portfolio or the way you've traded, excuse me, a lot of your capital is tied up in older positions starting from last year. And the actually positions, because I measure performance based on successful trades, and I do it arbitrarily calendar year, and we've had a pretty good run. It's about a 90% win rate if it's open this year and closed this year, not going back to last year where we still have significant paper losses on things. And the one thing I tried to counsel, you're in equities, you're going to take risks. This is a cash and income service first, and we're different here, very different than the rest of the world, in that I think like an investor, and I do fundamental research in the real world, and then on company's balance sheet, market position, whatever, and then we trade short term. It's a hybrid model, and with that, you have to tell yourself, I'm in an equity as if I own it. It went down. Do I want to sell it because it went down? And that's, of course, the worst reason to do anything. So if you focus and you say, well, you never heard of this service, and I owned Apple at 165 and now it's 143. There's nothing wrong with Apple as a company, and you're just generating cash every week. So you have to look at the value of your positions that are underwater based on their market value. That's what you do your math. Someone had sent me a note. How do you calculate the rates of return is on the original capital that you put into a position or on the current value. And it's not a complex, but it's not a simple answer, somewhere in the middle. When it's rolling of a put or something like that, and you have a net debit, it's based on the original capital. When you're evaluating the position, when you're evaluating the trade, it's a standalone trade. So you have to evaluate both. And it's the same for calls. And you throw in with calls the mix of adding and appreciation. All of this is covered in the training materials on the website, which is why I bring it up. At times like this, doing a refresher is not the worst thing in the world. Any more questions, Emily?
Yep. What is your thoughts on Crocs going forward?
I really like the company, and they've outperformed. They were expected to slow down during the pandemic, and they didn't. I mean, when the pandemic started to slacken, and they've been crushed. But the companies, for those who are completely unfamiliar, they're rubberized. Well, they're rubberized shoes, and they broke out during the pandemic. Think of it, they've gone from 180 to 50. And if you and they went up in the pandemic because they first started getting headlines during the pandemic. Let's see what the multiple is. Yeah, the multiple is 5, which will climb based on earnings, but it's ridiculously cheap. The Crocs came out of the box, so to speak, when it used to be ICU people and ER people in healthcare wore them because they could be sterilized. And then everybody had to wear them because of COVID, and they gave away. And they were a large company before this all started. And then people realized the $75 Nikes in the backyard every day because the kids aren't going to school. Let's get a pair of $29 Crocs, et cetera, et cetera. So I'd like it a lot. You avoid it during earnings because you never know what the street is thinking about this. But at 5 times earnings, it's really, really low priced, and it's very easy to trade.
Okay, Francis says, what do you think of trading the trade desk if you're willing to keep rolling?
Well, we're in the trade desk and Income Masters. That's another stock that's come down. The question will be, excuse me for a second. Without getting into the arcania, if there's such a word, of what they provide technically to advertisers. For those who aren't familiar, the trade desk, using software to artificial intelligence, whatever, helps advertisers direct their ads to this streaming service at that time, to your iPad or your phone or your whatever. And they're very important, dominant technologically in the area of placing ads and streaming services. Now, there was just an article today that more and more people, to save money, are moving to free advertising supported streaming services. And one of the things that triggered the article was IMDb TV, which was IMDb is the Internet Movie Database, whatever it's called. It's owned by Amazon. IMDb TV was a free service. It was Amazon. And it's now called Freevee, Freevee, and that's Amazon. And they're starting to put high quality things there in addition to reruns from the 1960s. And this is good news for Trade Desk, assuming they can execute. There's still a very high multiple stock, high price earnings multiple. It's come down a huge amount. And it has a leadership position. So I only want to trade it with silly puts, and hard to believe that we got caught in a silly put in Masters and we're still rolling it. We don't have a large, it's not a big paper. We'll be out of it soon is the point. So if you're willing to roll, it's like Zim. In fact, it even has higher premiums. Unlike Zim, it has a very elevated price earnings multiple and is more sensitive to news from the streaming world, and so forth and so on. And Amazon, I think, did 28 billion last year in advertising. So any Amazon announcement that they were going to add a cloud service to help advertise, no one would buy it. No one wants to give advertising Amazon their proprietary data. You have to be careful about competitive announcements with trade desks, which will come out of the blue. And that's why I only like to trade them with silly puts.
Hey, Michael, that's it for questions.
Well, thank you all. If you're in Masters, I'll see you in a few. And if not, I will see you next Monday for the June welcome session. And then we trade again next Tuesday.
All right. Thanks, Michael. Thanks, everyone, for joining us. An email alert with these trades is in your inbox. We have recorded this session. We'll be posting it to the member website. As Michael said, we meet next Monday for your options income weekly live. That will be at 11 a.m. Eastern, and we'll have live trading on June 7th at 11 a.m. Eastern as well. One link for live trading, one link for the session, the OIB weekly income report session. You should have an email in your inbox, or you can follow that link that I sent you or that I put in the chat box. Thanks and have a good day trading.